those were the headlines that we're tracking for you today. Now on to what's brewing. Furniture rental startup Rentomojo has ended the last financial year with its highest ever sales on the back of demand recovery. It reported a 60% jump in revenues to 193 crore rupees for FY24, more than threefold surge in net profits to 22 crore rupees, a 142% growth in EBITDA to 66 crores for the year. Now, Rentomojo said the growth was driven by a 45% year-on-year increase in average items deployed, strong customer demand and effective occupancy levels of items. For more on this turnaround story and whether the momentum can sustain from here on, I have with me Gitansh Bamania, the founder and CEO of Rentomojo. Gitansh, thank you very much for your time here on CNBC-TV18. You know, it's been a tough couple of years, for companies like you with the pandemic, and then you've come back with your highest ever sales for FY24. What helped achieve this kind of a revenue and profit growth, and, what exactly would you attribute this to?
No, so thanks, Ritu. Thanks for having me. I think, COVID was a blessing in disguise for us. We understood the power of subscription in this period that, when the operation lockdown was there, we didn't have to go out every month and, craft new subscribers for us. So that really helped us. We could focus a lot more on the direct costs for us. And, it's a very complex business. We have the same complexity of e-commerce. We have the same with many warehouses, logistics, etc. We have the same complexity of a subscription business. Need to take care of churns, need to collect from people at the right time. And we have the same complexity of a lending company, right? I mean, we need to verify our users. So we took this time, took the entire COVID period and really automated a bunch of these costs. Just like maybe we used to have a route optimizer from outside, we automated that. There used to be a manual team that used to verify most of the application that used to come to us, so we automated that. Now, if you go to Rentomojo, there's a proper chatbot, which is, possibly, which is an AI tool at the back, which is taking care of most of the queries. So, a bunch of these stuff really helped us turn around the story.
All right, Gitansh, I guess the obvious next question then is, with all of this automation and whatever you've achieved in the last couple of years, will this momentum sustain for FY25 and the years ahead? What should we expect in terms of sales growth, your profit numbers? What would the business momentum look like, really?
We're already 6 months down into the year. This is the third quarter running. So I can be more certain of the momentum for this year. The momentum is pretty much like last year. I can still expect around, at least around a 40-50% growth on our EBITDA and PAT numbers. So last year we did about 66 odd crores of EBITDA and about a 22 crores of PAT. So one can expect around a 40-50% increase from here on, even this year.
All right, a 40-50 kind of an increase is going to be good for the company. But help us understand the trends that you're seeing in the rental market. In terms of the occupancy rates. What are the number of items you're deploying now versus what you were doing a year ago? What about subscription trends, and what's the average revenue per customer that you're able to earn today?
No, so it's a very, as I said earlier, it's a very complex business model. Just like how airline company, they manage seats at the end of the day. If somebody has 10 airplanes and every airplane has about, let's say, 200 seats, they're essentially managing 200 seats. And every day's job for them is to manage supply and demand and balance that in a way to manage occupancy. And so is the same for a co-living company, a co-working company, in which they're managing seats again. For us also, we manage over 4.5 lakh assets today, and every month, for the last 8 to 9 years, we have a clear demand to the pin code levels or to the region levels. What kind of a demand are we seeing? How is it growing with respect to, and what sort of a correlation it does have to the traffic or the sessions? Not just that, we have a great understanding of what sort of products are coming back from the market as well. So, it has taken us years and years for the past, and we have been able to perfect this algorithm over the years, and we have been able to balance demand and occupancy in a way that we're still, for the past 8-9 years, we've been managing 85% occupancy throughout, throughout. And, kudos to the team for managing that and perfecting that algorithm over and over, which might be a great moat for us as we go forward.
But Gitansh, what are the numbers? Let's say you stock 100 units. How many are you able to, rent out What is the average spend or revenue you're earning from each customer?
So each customer, the LTV by CAC is, through the roof in our business. We earn about, roughly about 20,000 rupees, per consumer over a subscription period. And, at healthy gross margins, the LTV by CACs are, very high. Early, double digits is what I would say is in terms of the LTV by CAC for us. So it's a very high LTV CAC, high gross margin, high ROE business with very high retention rates for us. A good amount of people every month those who are ordering are coming from repeats itself.
Gitansh, we just have 20 seconds left. We understand you're looking at an IPO in 18 months. If you could confirm that for us.
Yeah, I mean, we're more focused on preparing ourselves, and of course, the markets are fairly hot, so we're just focusing on really the PAT growth and getting ourselves prepared. As and when the time comes, I think in the next 18 to 24 months, that's the aspirations, but we are focusing more on the preparedness more than anything else.
All right, we're going to continue that discussion at a later date. Then, Gitansh, thank you very much for joining us here today. Thank you.
Thank you. Thank you.
And for more news and updates, all you need to do is follow CNBC TV18 on all of our digital platforms.